Good morning. Welcome to a morning call. I'm Latha, Venkatesh, and with me are Sonia, Shenoy and Anuj Singhal as always. It's a morning where the market still could go either ways. The important point is yesterday the markets managed to close higher. The important technical levels were crossed. 200-day moving average was conquered. But there are still a lot of doubts. FII sold 1,500 crores. Of course, it's matched by 1,500 crores of DII buying. So again, it could go either ways. The 200-day moving average has been crossed, but we are still in a lower highs, lower lows pattern. So the overpowering pressure of the bears cannot be ruled out. And it is expiry week, so those who have the ammunition have the upper hand. But for me, besides all these technicals, the overall macro scene is not looking very good. The government is clearly losing its advantage on several bills. The land bill is definitely in the limbo now. It's come at an unfortunate time with farmer distress as well. More importantly, it seems to be losing the initiative on GST as well. The behavior of the congressmen and several other parties doesn't look like there will be broad bipartisan cooperation on a bill which everyone wants, but obviously everyone wants to score brownie points. So it doesn't look like we are making much headway on the legislative front. And on the practical front, the return of the Tilaya project could be for a whole host of reasons. Probably that coal linkage which they thought was coming their way is now clearly not there, and that must have been one important reason why the company walked out of the project. But if you looked at the data, it's a little scary. I mean, they were promised 17,000 acres of land, and they didn't even get 1 acre. I mean, 6 years and not even 1 acre, and Jharkhand government saying we worked very hard in the last 6 months. But what happened in the last 6 years? What happened in the last 5.5 years? This is, for 2 years we had a cabinet committee on investment, CCI, which was, even under the UPA government trying to resolve matters. It is about 10-11 months of the new government. And it has a friendly government in Jharkhand. With all these going, if one project could not get 1 acre, I'm a little skeptical about, how things are going to progress. As well, the government coming with the statement that we will build the new UMPPs in the place of the old badly run plants, which means the government is openly saying, I cannot acquire new land. And therefore, I'm looking for ways in which, to build more efficient power plants. The macro scene is leaving a very bad taste in the mouth. And overall, this El Nino fears from Australia are indicating 3 times higher chances of an El Nino this year. I don't know whether the market will have the stomach to let the bulls win this round.
Okay, I guess that's the reason why the FII sentiment has been so poor. So you spoke about 1,500 crores of selling yesterday. If you look at the last 10 consecutive trading sessions, it's been more than 8,800 crores of selling that we've seen by FII. So clearly, despite that short covering move that we saw yesterday, there continues to be selling by FIIs. But having said that, Latha, there was quite a bit of delivery-based buying as well. So I'm going to go to Anuj for that. Anuj, hi, morning. It was a very volatile day yesterday. The Nifty recovered 100 points from the lows.
Yes.
Was it purely a short covering bounce, or did you notice some delivery-based buying in names like ICICI Bank, etc.?
Morning, Sonia. It was a combination of both. As Latha pointed out, the FII selling was matched dollar to dollar, rupee to rupee by DIIs. Absolutely the same number. But before that, just a technical point. Yesterday was a big, powerful short covering bounce as well. And what was interesting about that bounce was the last 30 minutes, because the Nifty went to 8,300 and then somehow receded, gave up 40 points. The last closing price or traded price for Nifty was 82.65. It's the averaging that got it to 82.85. Why is 82.65 important? Because that's a 200-day moving average as well. It's the rising 200-day moving average now for next few days. While there was short covering, you can't deny the delivery-based buying in ICICI Bank yesterday. And that really was the bargain buying that we referred to about some individual stocks. It had corrected 23% and everything becomes good at a price. So you saw big surge in Bank Nifty because of the buying in ICICI Bank. But IT and pharma stocks continue to see delivery-based selling. And that's the problem point. Of course, again, the point must be reiterated that for every rupee of buying, there's 1 rupee of selling. So clearly, the issue here is till what time FI buying is being matched by DI, or FI selling is being matched by DI buying, because that clearly is a big support for the market. Anecdotally, when you see instances like this where FIs continuously sell for 7 or 8 days and DIs continue to buy for 7 to 8 days, the market in the medium term has a big rally. So that point should not be lost on anyone. So, for all you know, this market could be preparing itself for next round of rally, maybe at some point in May. But you do get a sense that just for the near term, the pain is not out of the system, purely because, you know, the selling has been just way too much, and the ammunition with the bears is still too strong, especially as you head into the expiry. Even yesterday, FI sold index futures just 2 days ahead of expiry. My sense is that 81.85, yesterday's low, which is now 100 points from here, is your key support level. If that is breached either today or tomorrow, then the expiry could be, you know, somewhere around 8100 or maybe even below that. But if somehow the Nifty today maintains the 200 EMA, 8265, and maybe goes towards 8300, 8315, then of course the power of short covering would come in, because there's so much open interest at 8300 call, 8350 call. All those call writers will be forced to cover positions. So it's evenly stacked at this point in time. But I would not like to stick my neck out and say that okay, the expiry is at 8100 or 8400. Fulcrum is 8250. The Nifty would move around 8250 for some time, but then there will be that big move that you normally see on expiry at 3 p.m. tomorrow. You know, I'll be really keenly watching out for that. You do get a sense that maybe, and the operative phrase being maybe, just one more downtick before expiry, before the market bottoms out.
Alright, so a lot of volatile moves perhaps, but you were talking about delivery-based buying. ICICI Bank, of course, had more than 500 crores of delivery-based buying, but even some other stocks, you know, Tata Motors had 200 crores of delivery-based buying, HDFC saw 330 crores, and you had 100 crores of delivery-based buying in Maruti as well. So in all of these stocks, it's very clear that despite the volatile moves that we're seeing in the market, there's some serious buying that we're seeing at lower levels.
I'll tell you one thing, Maruti is the perfect example of what kind of market we are in, Sonia. The market is going to reward top line growth. The market is going to reward good earnings. The Nifty is 10% off highs. Maruti yesterday made a lifetime high, and that's, you know, whatever market you are in, if you identified right stocks, every day is a buying opportunity. This really is a big bull market for individual stocks, and for all you know, over the next few days, in a broader market, UPL was one stock where, you know, you saw the stock almost reaching lifetime highs. So, got to select the right sectors, right stocks, and you'll still make a lot of money even if there's a lot of volatility.
Alright, all those questions will be answered.